Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today's guest is Stewart Heath, and he is founder and CEO over at Harvard Grace Capital. Stewart, welcome to the show.
Thanks, Adam. Really appreciate it. It's an honor to be with you today.
All right, so we got a lot to talk about here. So we're going to get into real estate investing and how you're helping entrepreneurs and executives invest in real estate passively. But before we get into that, how'd you get into the business? Like, when did you get into real estate?
Well, I got into real estate for myself way back in 2000, just buying a duplex here and a rental house there and things that, a few condos along the way. And I'm a CPA. I was doing that all while I was running my practice, and really found out that I loved real estate a whole lot more than I'd liked accounting. So from there, I just continued to have the desire to do bigger projects. And so now today we do commercial-sized properties, and we syndicate our equity from other investors to invest along with us. And so that's kind of how we got here 25 years down the road. So.
Wow, that's amazing. What areas of the market do you focus on, and also geographies, if you will?
Yeah, being a bean counter, I like real estate because it's easy to it's easier to say whether or not I'm really interested, because it will pencil or it won't. Because to me, it's all about the numbers, because the cash flow is the end goal here. Cash flow and tax benefits, I should say. So our geography is basically from Nashville, Tennessee, down to Birmingham, Alabama. I call it the I-65 corridor. It's where I have lived and grown up, my entire life. We've got properties in a suburb of Nashville called Spring Hill. I've got 4 properties in Huntsville, Alabama, and 3 in Birmingham. And that's just sort of the corridor. It's where it's an area that we know, that we live in. We do our own property management of the assets. And the assets that we target are, we like to say anything that cash flows, anything commercial. So what we have currently is office, suburban office, medical office, some retail and storage. Multifamily is typically the queen of commercial real estate, and we do love that. We follow that market pretty closely. But I've never found one that I could make pencil at a price that the seller was willing to take. So we do underwrite an awful lot of deals, but we haven't done a multifamily deal yet. But never say never.
Interesting. Wait, you mean in the 20-some years you've been doing this, you haven't found one that penciled? Or recently? I was just double checking that I understood that correctly. I was going to say how.
Well, I've only been chasing the bigger deals since 2021. I've found some, and I make them pencil, and then I say, here's my price based on what they're selling, and they won't take it. The multifamily market is so crowded. There's always somebody willing to overpay because they want to do the value adds and that kind of stuff. So that's great. I'm not going to pay you for what I have to do. So I don't pay the seller for potential, because potential is another word for work on my part. And so I'm the one that will make that potential work. So it's always a tug of war. And so interest rates has a big place to play in that. Lower interest rates.
So it sounds to me like, or I should ask you, would you say that you have a bit of a more conservative approach to real estate for your investors and yourself overall?
I have. Our approach is, actually, we put it on all of our marketing materials that boring is beautiful. And in that a stabilized property, just like a mature company, like a great big food production company or something like that, they're stabilized, they're mature, they throw off cash. And you can do lots of things. You can use that cash to go buy other companies or, in our case, other properties. But the investors that we have attracted to what we do are mainly interested in recurring cash flow. They want better than CD level returns. They want stability beyond what the public markets can provide in both equities and bonds. And most of them have come to really appreciate the tax benefits that come with direct ownership in real estate. So we package that up and shift all of the tax benefits to the investors themselves, of which we are investors as well. So we have our own cash in the deal. But our rules are, one, we don't do floating rate debt. Even if you're at the top of the market and rates are coming down, I don't do floating rate debt. I don't do value adds or development, ground up development. And it's not that I'm against those. I have done those, but that's where all the risk is. And so we try to eliminate all risk except for vacancy risk, which really nobody can control. Sometimes you want your tenants to go away, and sometimes you can't make them stay. So that's just part of owning property is a vacancy risk. And we believe that if you keep the property up nice, you make sure everything works, that the grass is cut, that the flowers are pretty, and that there's the parking lots are lit and everything stays clean, and you address all the tenants' needs, then they want to stay. And that works pretty well for us. We've got across our portfolio, we've got a 98% occupancy percentage through the end of Q3.
I want to circle back to the investors type side of things, because that is pretty specific when you want to, like you mentioned, the investors that want cash flow. Like go further into that. Who's typically, because at the end of this, I do want you to leave your website or social or however you want people to catch up.
Sure.
Who's typically a good fit to work with your team?
Well, that's the kind of question we ask ourselves every week. What's our marketing avatar? I mentioned earlier, I'm a CPA, and I think of my investors are people who would have been my clients in the 20 years that I had my own practice. And so they're high net worth individuals or they're successful entrepreneurs whose businesses are throwing off a lot of cash. And I always encourage entrepreneurs to diversify into multiple streams of income beyond just their core business, because we don't know what we don't know. And just multiple streams of income is just security. I mean, you don't generally take everything you got and buy one stock with it. You buy multiple things with your investable dollars. So, that includes in doctors and dentists and even attorneys that are successful professionals who want to get, like I said, again, tax benefits and recurring cash flow. But generally, it's going to be high net worth people, and we generally call those accredited investors. That's what the government calls.
Yeah. Well, this has been great having you on the show today and learning more about your background. Well, what's next? Like, what are you guys looking at? What kind of properties? Like, what's on the agenda to close out? Let's just say we're recording this in 2025 for everybody listening and beyond. Like, well, what are your goals going forward?
Well, thank you. We actually have a board meeting in the next 2 weeks to sort of discuss
that. That's good. I'm getting you some prep on that then. There you go. See?
Yes, you are.
You weren't expecting that. Come on, go ahead.
I wasn't expecting to go public with it, but yeah.
Yeah, exactly.
So we just closed a premium deal down in Birmingham about 2 weeks ago, and I mean, it's just a textbook example of what we like. And I sort of sworn off any more acquisitions the rest of this year because holiday season capital raises are no fun. But we're getting ready for 2026. We've been talking about really since the end of COVID and really since the fall of 22 that it's going to become a target-rich environment with sellers needing to sell in combination with falling interest rates. And let me tell you, the lenders out there are already anticipating the lower interest rates. They're getting aggressive with their rates even beyond what the 10-year Treasury bond market is doing. So it's been really attractive, our last three acquisitions. So we are actually, everything we've done is a single asset transaction we raised for that particular deal. We are putting the steps together to form a fund, which we will launch in Q1. And there's 3 or 4 deals we're watching right now. We may try to put them under contract in December to close in Q1, as well as raise for our fund. So that's really what's next for us. The fund parameters will be pretty much exactly what we've been doing, boring cash flowing deals that passes out pretty great tax benefits, because everybody should know, any investor should know by now, we have 100% bonus depreciation. And so that, at the very least, that will shelter all your income from a deal like this for about 3 years. So you'll get 6, 8, 9% cash on cash on a tax-free basis, and that really should be looked at as a 12 or 13% return versus something else you might be looking at. But that's what we're working on for Q1 of next year.
You are busy. How do people follow up? How do they connect?
Yes,
You are busy.
The best way to get me or to any of us is go to harvardgrace.com, and you can find my Calendly link there. I will talk to anybody about real estate all day long. You'll find great resources there. You'll be able to look at the properties that we're either working on or that we're already operating. So that's really our best central source. You can also find me on LinkedIn, Stewart Heath at Harvard Grace Capital. I think I'm on Facebook too, but frankly, I have a content people who handle that because I'm not a big social media guy.
All right. Well, for everybody listening, just so you know, we'll definitely put some links in the show notes, so you can just click on the links and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show, each and every day, bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So again, hit that subscribe or follow button. And Stewart, thanks again for coming on the show.
Thanks, Adam. It was fun.